Hi Wendy.
Hey, hello.
Okay, thanks for your time. Okay, Wendy, here's my name card. Okay, basically I'm a financial consultant with NTUC Income, and I have a license to give advice on life insurance, health insurance, as well as investment insurance. Okay. Now, before we begin, I just want to draw your attention to NTUC Income. We have this financial building block. So basically, the financial building block helps to identify what is important to you, what have you done, and what more you can do. Now, if we look at the basic protection, it usually starts off with things like medical planning, especially with the high cost of medical expenses here in Singapore. We look into hospitalization expenses, critical illness treatment, and even, like I said, the rising cost of healthcare. And then we have family protection, things like monthly expenses, dependents' needs, and total liabilities, in the event of any mishap. And also debt repayment planning, where we all have assets and liabilities, so like the housing liabilities, the car loans, personal loans, renovation loans, credit card payments, and things like that. And of course, at different milestones in life, the next will be asset building, where people will look into retirement planning, because no one wants to work forever. So whether the CPF is enough or not enough, the increasing life expectancy because of inflation will require more and more. And then we have children's education planning as well. So as the kids go through their school life, the cost of education also increases. So we look at whether it's local or overseas that they want to look at, tuition fees, and a lot of other living expenses. And then last of all, when all these basic and asset building have been taken care of, some may want to look at asset protection as well as distribution, and that's more into legacy planning, leaving for the children and grandchildren, and even donating to charities. So this is what the financial building block is like. So moving from here, can I just do a quick financial roadmap for you, and we can ascertain your current financial situation? Okay, thank you. After analyzing Wendy's data, I've had a discussion with my manager, and I'm going to generate two quotations, a RevoSave as well as a Fling, to help take care of Wendy's financial goals of planning for her retirement, as well as her daughter Juliet's educational needs. Okay, so I'm now going to generate the two quotations. Okay, I'm now going to select RevoSave as well as Fling. And then I'm going to get quotes for selected plans. Okay, for the RevoSave, I'm selecting a 15-year premium paying term. This is in line with Wendy wanting to retire age 62, so that's 15 years from now. And she has indicated her budget to be 1,500 a month. And for Fling, Wendy has mentioned that she's willing to set aside 30,000 as a single premium for this plan as well. And I've spoken to Wendy over the phone and explained to her to direct her to the website of our funds. And based on her risk appetite of moderately aggressive, these are the funds. So she has indicated to me that she would like to look into the Asia Managed Fund. So I'll be selecting Asia Managed Fund 100% allocation. And I'm now going to generate both the plans. So first the RevoSave. So I'll be presenting this to Wendy when we meet up. But before that, I will add plans for consideration, just like what I will do when Wendy is in agreement to this plan. So it says plan successfully added. And I will do likewise for the Fling. First, I will generate the quotation. And I will also add plans for consideration. So this plan is also successfully added. After which I will go back to recommendation And the plans that I've added successfully for consideration will be in the PDF format, where I will not only present to Wendy, I will also now key in my reasons for recommending her these two plans so that I can present it to her when I meet her next. Hi Wendy, thank you for your time once again. Okay, so Wendy, after we met the last time and after gathering all your information, I've actually gone back to the office as I promised. I've analysed and I would like to make two recommendations, two plans to recommend in line to take care of your two financial goals, which is retirement for yourself and education planning for Juliet. Alright, so this presentation will probably take about 30 minutes to 1 hour, depending on whether you are in agreement to it and you want to put it in place. So can we proceed now? Okay, Wendy, before I proceed to show you the recommendations, can I just reconfirm a few things that we discussed previously? First of all, your budget. To take care of these two needs, you are willing to set aside a monthly budget of 1,500 and a single premium of 30,000. Is there any change to that?
No.
Okay, good. All right. Now, also in terms of the shortfall, for your savings for retirement needs, you previously mentioned that you would like to have 80,000 per year, when you retire age 62, that will be in 15 years time, and you would like to have this amount for 20 years.
Yes.
Okay, so with that in mind and some of your plans that you already have in place that you shared earlier, our analysis show that what you need is about 2.27 million for your retirement, of which you already have about 685,000. So there's still a shortfall about 1.59 million. Now moving on to the other financial goal, which is education planning for Juliet. You mentioned that for Juliet's whole education, tertiary education, you're looking to set aside about 70,000.
Yes.
And that will be in 5 years time. And also taking into consideration the rate of return, rate of inflation, and some of the investments that you have in place, as well as some of the policies. The amount needed for Juliet's education will be 89,339, of which there is already a current coverage of 177,000. So there's still a shortfall of 71,599, which I'm going to help you address. Now, in terms of your risk profiling, because one of the plans is also an investment-linked plan, based on the risk appetite on the questionnaire that you completed previously, you are moderately aggressive, which means your objective is to strike a balance between fixed income and equity investment for growth opportunities, and you have agreed to that. Is there any change to that?
No.
Also, in terms of your investment knowledge, you have been assessed to have the relevant experience in ILP. Okay, Wendy, so this is my basis of the recommendation. Basically you have two priorities. The first one is the educational planning for Juliet. Second one is the retirement planning. So we have already ascertained the shortfall for Juliet's education planning. The shortfall is 71,599, and for your retirement planning, the shortfall is 1,989,343, 1.9 million. Now, I'm proposing RevoSave with dread disease waiver. The premium is 1,500 monthly. And what RevoSave will do is basically it will help to provide 8091 from the second policy year for 15 years. However, what will you can do with this 8091 is from the second policy year is right up to the 5th year, where Juliet will require some funds to go for her education. That will give you an amount of 34,101 at the end of the 5 years. And of course this is also compounding. Now Juliet, you can use that 34,101 to start Juliet off on her tertiary education. Subsequently, on the second and third year of her education, you will still be receiving the 8091, which you can also help to fund her educational needs. Now thereafter, we will still be paying the 8091 on the RevoSave, which you can then use to start to accumulate. That will be from year 8 right up to year 15, where you will be 62, and you will want to retire. Now, after which you will still receive the 8091, but because you require more than that for your retirement planning, okay, that's where the Fling comes in, okay, and the Fling, the amount that you receive for the RevoSave will help to reduce the shortfall. However, based on your budget, okay, the shortfall for your retirement needs cannot be addressed fully because your retirement needs, there is a shortfall of 1.9 million. Okay, so with your budget of 1,500 and 30,000 to take care of these two needs, we will not be able to reduce the shortfall completely. So what I also would recommend is that I will meet you in a year's time to do a review, okay, to help you bridge the shortfall on your retirement again, okay, and see how we can get to a point where you will be able to retire comfortably at age 62. Okay, with the desired 80,000 that you want every year for the next 20 years.
So Fling is for education planning or for retirement planning?
No, the Fling will be for your retirement planning.
Then my children's education?
Your children's education, you will use the funds from your RevoSave at the end of the second policy year, where, like I said, you will receive 8091. Okay, so you will receive this on the end of the second policy year, end of the third policy year.
Which is 34,000. Correct. But yes. Not enough. What is my shortfall for education planning?
So your shortfall for your education planning will be this amount. So basically, for Juliet's education, you need 70,000, right? Okay, so the 70,000, if we less off the 34,101, yes, plus the 8091 for her second and third year of her, okay, it reduces the shortfall to 19, so the shortfall now becomes 19,717. Okay. So that's where the Fling will also come into play.
Partly lah.
Yes, partly. Alright. But of course, because we are using these two plans to take care of two needs, the biggest shortfall will be based on your retirement, which is where we will do a review. So in terms of Juliet's educational needs, these two plans will help to take care, because her educational needs will be in 5 years time, yes, and only for 3 years. Correct. Thereafter, you know, it will be more focused on your retirement planning. Okay. All right. So basically, just to run through with you on the benefits and limitations of these two plans. Okay. Now, the benefits of RevoSave basically is you have the flexibility and option to withdraw the cash benefits from the plan and deposit back with NTUC income at a prevailing interest rate. Okay. So the 8091, you can choose to leave it and it will accumulate more, and that's why you get the 34,101. But after her educational needs, you still don't need to take the 8091. You can keep it. So at age 62, if you retire and you don't need these funds, or you choose to continue working, you can still leave the 8091 there to accumulate. Okay. Now, NTUC income will pay the sum assured and bonuses in the event of death and TPD before age 65 for the RevoSave. Now, the limitations of RevoSave is the bonuses under RevoSave are not guaranteed. Okay, it is dependent on the performance of the life participating fund and the cooperative, so the discretion of the allocation of bonuses to each participating plan. Okay, and of course, just to let you know, early termination of the policy usually involves in high costs and surrender value, because you know, there are a lot of costs involved to start up the policy. Okay, so it may not be advisable and you may lose if you terminate early. Okay. Fling is an investment-linked plan that gives you the opportunity to earn potentially better returns with low annual fund management fees as compared to other funds in the market. Okay, and Fling gives you the flexibility and options to have unlimited fund switch within the funds selection we carry to suit your investment risk appetite. Okay. Now, the limitations though is supplementary riders are not allowed to be attached to Fling. Okay. And should you wish to top up into Fling, the minimum top up is 2,005. Okay, with at least 1,000 premium allocation into each of the selected funds. Should there be more than one fund? Okay. But as of now, we're only selecting one fund. Okay. All right. So let me just run through the RevoSave benefit illustration with you. Okay. So basically, Wendy, let me just enlarge this. Now, in this benefit illustration, okay, you will see the premiums payable and for how long you need to pay the premiums, the duration of the policy, the guaranteed and non-guaranteed cash values, death benefit, surrender values, and maturity values, if any. This is what I'm going to cover. Okay, and I'll also be going through the product summary, because basically the product summary will have some contractual rights of the policy. Okay, and then it will also explain the benefits of the policy and the condition under which the benefits will be payable. Okay, so this is just a product summary. Of course, once everything is put in place, the actual policy contract will be sent to you. Now, on the first page of the benefit illustration, basically what you see here is the policy premium paying term, okay, is 15 years. Okay. That will be very much in line with your number of working years before you intend to retire age 62, okay, which is in 15 years time. Okay, the sum assured based on the 1,500 budget that you have set aside is 161,812. Okay, and a monthly premium of 1,005. Okay, of course, if it's an annual premium, then the annual premium will total to 17,307. Okay, now you can choose to pay monthly, quarterly, half yearly, or annual. So these are the premiums, you know, if you would like to choose a different frequency. Okay. But I booked based on the monthly of 1,005 because that was what we discussed earlier. Yep. Okay. Now, the figures here in this first table is showing the death benefit. Okay, if you look here, these are the end of the policy year as well as your age. So what you see, 1, 2, 3, 4 is the policy year. On the right is your age. Okay, so if you wanted to see, say for example, in 10 years time, okay, at age 57, your total premiums paid at that time will be 173,070. Okay. Okay, of which the guaranteed death benefit is already more, which is 234,628. Okay. Now with anything, there will always be a non-guaranteed, which will be declared you know, on an annual basis, and then it will add on here. But as a projection at 3.25, the non-guaranteed amount will be an additional 48,494, making the total death benefit to 283,122. Okay, based on a projection at 3.25. Okay. However, based on a projection at 4.75 at the 10-year, the death benefit will be 301,475. Okay. Okay. Likewise, at the bottom table here is the surrender value. Okay, again, in the policy years, based on your total premiums paid, the guaranteed surrender value, and always back to it, there's also a non-guaranteed surrender value. Again, based at 3.25%, this is the surrender value. Okay, and based at a projection of 4.75, this will be the total surrender value. Okay. Is there anything you want to clarify? In terms of
15 years, how much is it that I'll be getting?
Okay, so basically at 15 years, right? At 15 years, you would have paid 259,605. Okay, your death benefit at 4.75 will be 477,408. Okay, surrender at value at 15 year. Okay, after having paid 259,605 in terms of premium, your surrender value at 4.75 projected will be 315,596. Okay, so that will be the last line there. Okay. All right. Okay. Now, okay, if let's say at the maturity, right, your policy value will be as I mentioned earlier, 315,596. Same thing. Okay. So in a snapshot, the total guaranteed cash benefit is 194. Total projected returns is 315. Okay. Okay. Along with the policy, there is also some deductions that will come into play for the policy. Yep. But however, this has got nothing to do with whatever figures that I already showed you, but this is more for your information. Okay. Now, looking at, let's say, the first year, your total premiums paid is 17,307. Okay, if assuming it's paid annually. Now, the value of the premiums paid at 3.25 is 7,869. Okay, the effects of deduction is also 7,869. So you can see this is the reason why in the early years of the policy there is no cash value. Okay, so the total surrender value here is 0. But if we go down the road, let's say to 10 years, okay, the total premiums paid is 173. Okay, and the projected investment return, okay, the value of the premium paid to date is 207,228. So your total surrender value will be 158,619 at a projection of 3.25.
Yep.
But if we look at the projection of 4.75, okay, the total surrender value will be 174,279. Now, this is based on the deductions on the policy. Okay, so like I said, in no way this is going to affect the previous table that I showed you what your returns are. Okay, it's just to let you know that, of course, to start up the policies and things like that, there are certain costs to it.
Okay.
All right. Okay. Now, there's also a total distribution cost, okay? And the total distribution cost likewise also are costs of like commission and things like this. And again, the figures here is to be transparent to show you, and in no way it affects the figures based on your surrender value that I showed you in the very first page. Okay, so now in terms of the supplementary illustration, okay, the cash benefits option, okay, which will be paid yearly to the policyholder. So this will be paid from the beginning of the second at the end of the second policy year. Okay. So there is a guaranteed amount, okay, for the death benefit and the surrender value. Okay, same thing at 3.25. Yes, if you choose to pay out, as well as at 4.75. Okay. Now, the total guaranteed cash benefit, okay, is 194,175, okay, and the total projected return is 285,846. Of course, this will form the guaranteed plus the non-guaranteed accumulated interest and bonus, which is 91,671. Okay, this is at the projection of 4.75.
Okay.
The last page, huh? Okay, so the cash benefit schedule, okay, what will happen is at the end of the second policy year, you will start to receive a guaranteed yearly cash benefit, and this will be 8091. Okay, so you will receive this at the end of the second policy year every year, okay, and likewise, in the first year is 0. So after that, you will receive a guaranteed accumulated yearly cash benefit as well as a non-guaranteed. So again, at 3.275, assuming, let's say we look at 10 years down the road, it will be 78,921. 78,000.
Provided I don't take.
Yes, because it's accumulating. Okay, and we will pay a compounding interest. Now, if at 4.75%, then of course it will be a much higher. Okay, so the guaranteed portion of 8079 definitely you will receive. Okay, the non-guaranteed portion again will be declared on an annual basis. Okay. Now let me just run through with you on the product summary.
Okay.
So basically, this policy RevoSave is a regular premium anticipated endowment, okay, insurance plan that offers regular savings, investment, liquidity, and protection.
Okay.
So this is very much in line with what would be suitable for you and what we discussed earlier. Okay. Now the guaranteed cash benefits are payable each year starting from the end of the second year, just on the table that I just showed you. Okay. Yes. Now this plan is a participating life insurance policy, and it allows to participate in the performance of a life participating fund in the form of bonuses that will be declared every year. Okay. So it's your sum assured, your surrender value, everything will go up every year because we will declare. All right, on a year to year. Okay. When for the cash benefit, if the insured survives at the end of the 2 years from the policy entry date, okay, and if the premiums for this policy has been fully paid for 2 years, okay, a guaranteed cash benefit of 5% of the sum assured will be paid every year, okay, which is what I showed you earlier, okay, and of course this will be paid as long as the policy has not ended, okay. Maturity benefit, if the insured survives at the end of the policy term, then the policy has not ended, then the policy will pay 120% of the sum assured and 100% of bonuses less any outstanding premiums. Okay. So for death benefit and total and permanent disability, as mentioned earlier. Okay, surrender value as well, what I've covered earlier, okay, based on the figures there. Okay, and just to let you know that the bonuses for this policy are the way that you receive the share of the profits of a life participating fund. So there are two types of bonuses, namely the annual bonus, which will be declared annually, and terminal bonuses, which is not guaranteed but may be paid in the event of claims or maturity. Okay. Okay, basically, this may be a new term to you, but maybe I just thought I highlight. Okay, is smoothing of bonuses. Now, what is bonus smoothing? Basically, bonuses are where you receive a share of the profits of the life participating fund. So you know, there are always ups and downs. You know, because the bonus payout is based on a lot of factors, and what we do is to try to make sure that you know, in the bad years you don't be impacted greatly. So we smoothen out the bonuses across the board. Okay. Okay. So just to highlight to you that premiums are payable throughout the policy term. Okay, you can choose to pay monthly, quarterly, yearly, or half yearly. Okay, so we will decide on that once you are in agreement to put this in place. And the premiums rate are guaranteed and applicable to standard lives.
Okay.
So upon underwriting, if you know, the underwriter finds that there's some issues in terms of health, and they do loading or call for medical, then that will not be based on standard lives. Okay, but whatever I'm quoting to you now is based on standard lives. Okay. Also, once we put this in place, just to let you know that because the policy contract will only be sent to you after the policy is in force. However, when you receive the policy contract, there is actually a 14-day free look period. Meaning to say, when I meet up with you, I run through the policy contract. If there are anything that is differed from what I've explained to you, or anything not to your agreement, you have 14 days to effect, and all premiums that you have been paid will be refunded back to you.
Okay.
Okay? Okay. Okay, now let me run through with you the second plan, which is Fling. But before I do that, okay, remember I spoke to you over the phone, okay, and I told you that this is an investment linked plan, and I asked you to go to the website to look at the funds that I'm going to recommend. Now, basically, the fund that I've recommended, sorry, not recommended, basically the fund that you told me that you were comfortable with is the Asia Managed Fund, which happens to fall under the risk appetite of moderately aggressive, which is based on your risk appetite. Now, just to recap, in case you didn't run through this fund fact sheet in the website, the investment objective of this fund, okay, is to achieve long-term capital appreciation by investing in stocks and fresh income securities in the region, including North Asian and Southeast Asian countries. Okay, the strategy is to be value oriented. And investment scope, the fund will invest all or substantially of its assets in the Singapore domiciled Schroder Asian Growth Fund. So this is managed by Schroder Investment Management, okay, in relation to the equity portion of 70%, okay, and Singapore bonds managed by NTUC Income in relation to fixed income portion, which is 30%. That's right. Yeah. Okay. Now a little bit of background about these funds. Okay. Prior to 2nd October 2010, the investment scope was actually in Singapore 39%, Hong Kong 18%, and Thailand 13%. Okay. And Singapore bonds 30%. But now after 22nd October 2010, it's changed. Okay. Now this fund, Asia Managed Fund, was launched on 1st September 1995. So currently the fund size is about 103 million. Okay. And the initial sales charge is 3.5%. Okay, so it's actually you get a 0.5% bonus unit. So basically the sales charge is only like 3%. Okay. Now the investment manager, of course, is NTUC Income. Okay, but the fund manager is Schroders. Now, if you look at the bottom here, this table is an indication of the top 10 holdings as of February 2017, okay, Schroder Asian Growth Fund and all the other,
I read already.
Okay,
good.
Good.
So I understand.
All right. Now, don't know whether you saw this. This is rather impressive, but based on since last year to 28 February 2017, okay, this has generated 19.54% of
for 1 year.
1 year, yeah. So but of course, since inception, since inception of 1995, it's still a healthy 5.56%. Okay. Earlier, what we spoke about how the fund is made up of. So this is a graph showing that 73% is equities, and then the rest is made up of government bonds, corporate bonds, and whatnot. Okay, so that's the Asia Managed Fund. So you can actually keep this copy if you didn't print it out.
Thank you very much.
Now let me just run through the product summary for Fling. Okay, so basically the Fling is a single premium investment linked plan, okay, that protects against death and TPD, okay, during the policy term, and of course if TPD occurs before your age of 70. Okay, now this single premium plan, you can make a lump sum investment which you are going to do with 30,000 single premium, okay, and you can choose any of the sub funds, of course, in line with your risk profile. Okay, so this is Asia Managed Fund which we already just went through. Okay, now there are a few flexible options that you have with an investment link plan. Okay, basically, have you invested? You have, right, in investment link. Okay, let me just do a recap. Fling offers the following flexibility. Basically, you can do partial withdrawal, so you can redeem your investment anytime from the ILP sub funds. Okay, if you have that you have invested in, you can also do ad hoc top ups to suit your changing investment needs. Okay, to either increase or decrease your premium. You can also do fund switching, which is free. Okay, so you can switch your investment between ILP sub funds. Okay, but of course it will be in line with your risk appetite. Okay. Now, protection benefits, even though this is a ILP plan, okay, it offers protection benefits. So basically, what will happen is, should death or TPD occur anytime under age 65, okay, it will be 1.05 times your net premium. Okay. Anything above 64, it will be 1 time the net premium. Okay. So the funds that you are eligible to choose from, if you have gone to the website, basically are quite a number of funds. Okay, but yes, I've already generated the benefit illustration based on the Asia Managed Fund, okay, which is what you mentioned to me that you would like to put it in. But of course, with fund switching, you can always switch the funds. Okay. Now, there are certain fees and charges. So basically, in this section, we'll describe to you the charges that are applicable for Fling. From time to time, we may review the charges under Fling, and the charges described here are revised. We will inform accordingly and give you sufficient notice before any revision takes place. Okay. Premium allocation, you have chosen 100%, but in future you can also choose to split the allocation 70-30, 30-70, 50-50 if you like to. Okay, so you have the option to even choose a different premium allocation. Alright. Now, policy fees, initial and renewal. No initial policy fee is deducted at the policy inception, but subsequently, any annual policy, there will be an annual policy fee of $50 deducted, provided your policy net premium is less than 25,000. So in your case, because you are investing 30,000, so you will not be affected. However, if you do in future make any withdrawals and the premium net value drops to below 25,000, then there is actually annual renewal policy fee of $50 that will be deducted each policy anniversary. Okay, so the only thing you have now is the bid offer spread of 3.5%, which I mentioned earlier that when I was going through the fun fact sheet that because of your 0.5% bonus, it actually will reduce that bid offer spread to 3% only. Okay. Fund switching is free, so there's no fund switch. Okay, annual management fee. The annual management fee is not the same for all ILP sub-funds. The fee for each sub-fund can be found in the semi-annual fund report and the annual fund report that you will receive, on a regular basis. Okay. Surrender charge. If you surrender your policy fully, and cash-in value will be paid to you as the benefit, and the cash-in value is the value of the units at the time that you surrender. Okay, so of course, only depending on when you surrender, then you will have an indication of what will be your surrender value and your surrender charge as well. Okay. Now, just to let you know that the minimum premium for this plan is 10,000. Okay. And regular single top-ups can be done. However, you can only do it on a quarterly, half-yearly or annual basis, and at 2,005 per top-up. Okay, you can also do ad hoc top-ups if you don't want to do regular top-ups, but same thing, it can only be done at a minimum of 2,005 per top-up. Okay. Okay, Wendy, so do you have any questions or anything you'd like to clarify on the two plans that I just presented to you?
No.
Okay, then let me proceed. So, do you want to put these two plans in force? Okay, if you want, then we can do everything now, which I will only take probably another 15 to 20 minutes.
Okay.
Okay, alright. Now, before I proceed first, can I ask you, do you agree with the proposed recommendations?
Yes.
Okay, good. And is these two plans intended to replace any existing plan that you have?
No.
No. Okay, good. Likewise for the growth link, right? It's
Yes.
not intended to replace any plans.
No.
Okay. Now, as I mentioned earlier, there will be still a shortfall in terms of your retirement planning.
Yes.
So, is it alright if I put a date down to do a review with you 1 year from today, okay, to address the outstanding shortfall?
Okay.
Okay, alright. Now, I will also need you to just run through this with me.
Okay.
Now, it's one or more of the selected products and investment link plan, okay? So you agree that, yes, you are aware that this is an investment link plan, okay,
Yes.
for the growth link especially.
Yes.
Okay, and remember last time we met, you went through the customer knowledge assessment and you have done some investments yourself,
Yes.
okay? So you were deemed to be assessed to have the relevant knowledge,
Yes.
right? Okay, because we want to make sure that because this is an investment link plan, you are in agreement to it, okay? And the reason why you are in agreement is also because you have the relevant knowledge.
Yes.
Okay, now these are some of the documents that I just need to indicate that I've run through with you.
Okay.
So, okay, basically the nature of the recommended plan.
Yes, I
okay,
understand.
your contractual rights.
15 years, okay.
Yes, the commitment required.
Yes.
Fees and charges.
Yes, you gone
okay,
through with me.
surrender and claim procedures and charges.
Yes.
Okay, the details of the plan provider.
Okay.
Also, there's a copy of your guide to life and health insurance. Okay, and your guide to investment link plans that is available. You can download it at this website.
Okay.
Okay. Alternatively, we can send it to you. Now, a copy of the MFP, my financial portfolio, the one that all the fact find that we did. Okay, the benefit illustration, what I've run through with you, the product summary and the product highlight sheet will be available as part of the policy documents.
Okay.
Okay. The intended profile of the policy. Okay. I've also covered the pricing of the recommended plans.
Yes, and how much the premium?
The free look provision.
Yes.
Okay. Warnings, exclusion, and some disclaimers. The features and benefits, risks and limitations of the two recommended plans. Okay. Now, also, I can furnish the copy of the completed MFP and all the documents. Would you prefer it to be part of your policy document, or you want to receive it by hard copy or
Part of my
soft copy?
document would do.
Okay, all right. Now, you declare that you have read and understood that this document and confirm that the contents are current, true, complete and accurate in all aspects of NTUC's income, and you rely on this document and agreed to personal data collection statement at the start of the documents, right? Okay. And this whole presentation was done in a language that you are comfortable with, which is English.
Yep.
Okay. The policy contract for both the plans, okay, I would strongly encourage that I hand deliver it to you,
Okay.
so I can run through the policy contract with
Okay.
you. Okay, so that's fine with you.
Okay.
For both, we will deliver it by hand.
Okay.
And now, can we move to the proposal form?
Okay.
Okay, we have the proposal form fill up.
Okay.
Before that, can I know, would you want to be paying the premium on a monthly, quarterly, half annually, or yearly basis?
Yearly.
Yearly basis,
Okay.
And how will you be making the first premium payment?
A credit card.
Credit card. Okay, so I will have your credit card details. At the same time, I will also need your NRIC
Okay.
for the submission.
Can.
Okay, all right. So can we proceed with the
Okay.
application form?
Okay.
Okay, good. Okay, Wendy, so we have already completed the whole process,
Okay.
the application form and all the necessary forms that need to be signed. And thank you for your time. So what I will do now is I'll go back to my office, I will submit the application,
Okay.
and underwriters will underwrite the case. So I'll keep you updated on the process of the application,
Okay.
And once the policies are enforced, okay, I will strongly encourage that I meet up with you to run through the policy contract also for better understanding.
Okay,
Yeah.
okay,
Wendy, before I leave, can I just ask you, how did you find the whole presentation process?
Very good.
Okay, and definitely you find it beneficial?
Yes.
Yeah. Wendy, if is there someone in mind, you know, someone close to you, a relative or a friend that you feel just like you can benefit from this presentation that I've done for you, you know, perhaps they can also benefit from it. Is there someone that you have in mind?
Yes, actually you can contact one of my friend called Belinda.
Okay.
Okay, you can contact her.
All right.
I'll pass you her contact.
Okay. Before you pass me a contact, will it be all right if you contact Belinda first to see if it's she's in agreement for me to contact her? Then at least I won't be, you know, intruding in any way.
Well, that's a good idea. I will do that.
Okay. Thank you, Wendy.
Thank you.